What's going on, everybody? It's Rinsing Trades, and I'm sorry you have to look at this cold sore that's healing. It is absolutely disgusting, but I wanted to jump on here and make a video because it looks like we're starting to head into more of a market correction type market, and I want to emphasize on the correction part and not the crash because I don't think that the market is going to crash. However, I do think that the market is well overdue for a correction. So the markets fluctuate up and down. They have through the years, obviously, but in the long run, if you zoom out on the S&P 500, you can see that it's continued to increase and increase and increase. If you're a newer investor and you're worried because might be the first time you may see or you've seen a sea of red in your portfolio, the best thing that you can do is, first of all, to stay calm. Patience is one of the best things in the market that an investor can really have, and patience is going to allow you to hold on to your capital, maybe collect a little bit of a return while you're waiting on to deploy that cash. And in this video, I am going to show you the best ways on how to do that and how to attack that. So let's go ahead, and I have the MicroStrategy MSTR stock up here. I've been selling a lot of put options and a lot of call options against the leveraged version of this stock, which is MSTX. But for namesake, whenever I am selling put options on a leveraged version of that stock, I look at the actual derivative that the leveraged stock is going off of. So in this case, it would be MSTR. So if we look at this MSTR chart here, I was very confident in this ascending triangle here with this 50 EMA, but unfortunately it broke below. The 50 EMA, which is this yellow line right here, and the 200-day EMA, which is this white line right here, these two lines are the strongest moving averages in the trading world and in the investing world, however you want to say that. But if a stock falls through the 50-day EMA and it falls below all support levels, and the next thing that's sitting there is the 200-day EMA, more likely than not, the 200-day EMA is going to be what that stock bounces off of. So I trade off the 50, the 200, and I also use support and resistance levels. So I have been selling a ton of put options on MSTX. I'll go ahead and show you that position currently. As of right now, it's down $3,142, and I have 11 open contracts on this position. So I was very confident in MSTR at this level. Unfortunately, it looks like I'm going to be wrong, and MSTR will continue to fall. But you don't see me going crying and going on Twitter, oh my God, I'm selling everything, I'm liquidating everything, I'm getting out, blah, 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 all this stuff. This, guys, is what is called an opportunity, because now we know that if MSTR closes on this weekly candle below this 50 EMA, which it's very possible that it could bounce and wick right back up, back into this triangle at the end of the week, and this could be a massive bear trap, which happens a lot in the market too, because you just never know. But if MSTR closes below this triangle, closes below this 50-day EMA, the more than likely place that MSTR is going to bounce at is this support level here, which was the previous low. And I've drawn that line out already. So as a new investor that's looking at this chart, the best possible chance for you to get in at the cheapest possible price is going to be around $236 on MSTR. Now, you could either buy MSTR straight up at $236, or you could wait for MSTR to come down, and then you could sell or short a put option on MSTR. So if you've never heard of shorting put options or shorting call options, it's the inverse of buying them, when you are actually the one that's receiving a premium agreeing to buy or sell a stock at a certain price. So if we wanted to own MSTR, say at $236, we could actually sell a $236 put option and get paid a premium agreeing to buy MSTR cheaper than what it is currently. So in this case, I would probably wait until I saw MSTR come down a little bit. But if you were impatient, something that you could do is you could go out, and usually my strategy is I go out to the third Friday, at least 30 days to expiration. So as of right now, October 17th is the closest third Friday, but it's inside 30 days. So I would go out to November 21st, which is the next third Friday, 57 days from now. I then look for something that's around a 0.3 delta. As of right now, it looks like the 275 is going to be around the closest to a 0.3 delta. And if I was to sell this put option, I would put up $27,500 in collateral, and I would be able to collect $1,875 $1,880 basically, just agreeing to buy MSTR at 275 on or before November 21st. Now, like I said, I would believe based off this chart, if it closes below this triangle and below this 50-day EMA, I would presume that MSTR over the next few weeks will continue lower. So if I was an investor looking at this, I would probably wait and actually be able to say, hey, I'd buy it at 236. Well, something you could do if you really absolutely had to collect that premium today, we could go all the way out to January, scroll down to the 230, close to it, the 235. That's about a 0.2 delta now, and I could actually, for January, get paid $1,600 and probably $40-something just agreeing to buy MSTR at 235 by January. So this is a great way that you can not only get passive income, but acquire shares cheaper than what the stock's actually trading for currently. Well, another good thing about market drawdowns is that whenever you own these shares, you're going to be selling covered calls against these shares. You're going to be collecting premium. A lot of people like to call it collecting rent against those shares. So basically, if you were on the inverse side and you had 100 shares of MSTR right now, you could agree to sell. Right now, the current price of MSTR is $301.43. You could actually agree to sell MSTR at like $355. So you could agree to sell your shares at $355, and you could collect another $1,325 just to be able to do that. I mean, so even though MSTR is decreasing in price, this short call will actually be increasing in price and offsetting your losses. So you don't have to be like a buy and hold and sell when it rips. You can do this in short put options, collect premium, acquire shares. Once you acquire the shares, you can sell calls against those positions and constantly be racking in that premium at all times. So like I say to every single new investor, just because you see red in the market, that does not mean you should be running for the hills, pulling all your money out of your accounts and all this stuff. Red equals good. Red equals opportunity. The best time to invest in the stock market is after corrections, and especially after market crashes. Like if you would have just bought tons of leap calls on all your favorite stocks right after post-COVID, you would be like multi-millionaire, right? Like you would be multi-millionaire if you would have plopped like tens of thousands of dollars into leap calls back when the market crashed. But anyway, I wanted to come on here and just explain to you guys that you shouldn't be nervous. You shouldn't be scared. The market does what the market does. It goes up, down, left, right. Who cares? At the end of the day, rinsing trades is going to be selling puts, selling calls, collecting premium, and rolling when it makes dollars and cents, baby. So if you guys enjoyed this video, please make sure you subscribe to my YouTube. Leave a comment for a video you'd like to see in the future. And if you haven't already, make sure you follow me on X. I'm one of the most transparent traders on there and one of the few people that actually sell stock options on there other than a few select others. And, I want to see you guys start doing this because it absolutely changed my life. But anyway, I'll catch you guys on Twitter, and I'll see you guys for the next episode. Adios.